we are going to be having one of these series to discuss about risk management. And the risk management basically speaks to risk management both in the banking sector, that is the Islamic banking sector, and also risk management in the Islamic Takaful sector. To discuss this conversation today, inshallah, we've invited expertise in the industry, and that speaks to having with us Malam Ali Yubari Ali, who happens to be the head of micro, small, and medium enterprise at Jais Bank PLC, and also Mr. Ishaq Afolabi, who is the head of technical operation, family business at Salam Takaful Insurance Limited. Our guest will be speaking to different topics as far as the Islamic financial system is concerned. Before I get started, looking at the agenda that was circulated in the invitation, you agree with me that we have a couple of items that are to be discussed. That is looking at the agenda of the institute.
Wow, Blacky. I'm not sure I can hear you. Hello?
Yeah, sorry, it was a technical network issue. I'm sorry. Looking at the, can you hear me now, please?
Yes, we can hear you clearly now.
Okay, go on now.
Audible?
Although you are breaking at some point,
but can you hear me now?
Go on now.
Okay, thank you very much.
Go on now.
Okay, thank you very much, sir. So the first thing on our training agenda for today is to have the national anthem, after which we have the opening prayer. And to get started, so we are going to have the national anthem. So kindly just follow suit as soon as we start the national anthem. Please, can you confirm if you can see my screen?
Yeah, your screen is up.
Registrar, sir, can you see my screen?
Yes, your screen is okay. I can see it. Go ahead, please.
Hello?
Yes, we can hear you.
We can hear you, please. Go ahead.
Hello, can you see my screen?
Yes.
Hello, can anybody hear me?
Yeah, we can hear you.
Yes, we are reciting the national anthem now.
Hello?
Yes, we can hear you. Please go ahead.
Okay. Thank you very much, ma'am. So can we have the national anthem now, please?
Yes.
At that, we now have the next thing on the agenda, which is going to be to have the opening prayer. And for the opening prayer, permit me to call on one of our member who is present in person of Barrister Al-Bashir Lawal Liko. Al-Bashir Lawal Liko is one of our members in Abuja. Malam Al-Bashir, if you can hear me, kindly unmute yourself to give us the opening prayer, inshallah. Malam Bashir, can you hear me? Okay. Let me quickly move to. Wa alaikum salam. I think there's an interference with your devices.
Sorry.
Okay, you can move now. Can you move away from one of your devices? Malam Bashir, can you move away from one of your devices? Two of your devices are conflicting, so that's why the noise is coming.
I'm just using my laptop and my phone is not close to me.
Okay, let me quickly.
Hello? Maybe because of the words.
You can please mute yourself, while we invite another person to give us the opening prayer. Please permit me to invite one of our foremost fellow member and who has been a very participatory member at that. Kindly allow me to invite Dr. Associate Professor Adam Abubakar. Please, sir, can you unmute yourself to give us the opening prayer, sir?
Okay, صلوا على النبي الكريم.
صلى الله عليه وسلم.
بسم الله الرحمن الرحيم. اللهم صل على محمد وعلى ال محمد كما صليت على ابراهيم وعلى ال ابراهيم انك حميد مجيد. وبارك على محمد وعلى ال محمد كما باركت على ابراهيم وعلى ال ابراهيم انك حميد مجيد. اللهم اجعل جمعنا هذا جمعا مرحوما واجعل تفرقنا بعده تفرقا معصوما ولا تجعل فينا ولا معنا ولا حولنا شيئا ولا محروما انك على كل شيء قدير. اللهم انا نسالك الخير كله عاجله وعاجله ما علمنا منه وما لم نعلم ونعوذ بك من الشر كله عاجله وعاجله ما علمنا منه وما لم نعلم. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار. سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين. فاتح.
Thank you very much. Thank you very much, sir, for that opening prayer. And I think at that we are good to go on other items on the agenda. I want to at this moment at this point recognize some of our members, key members of the institute that are present and who are online at the moment. I'm not going to call in any specific order, but I would just want to, inshallah, recognize every one of you that are here present. I want to say that may Almighty Allah reward every one of you and make this training a beneficial one for every one of us, including those of us that are here in Nigeria and those that are joining us from outside the country. We can see all of you and we recognize your presence, and we say to you, Jazakumullah khair. So at that, I want to again go to the next item on the agenda, which is to in person of Malam Mansour Musa, who is the current registrar of the institute. I want to call him to give us the welcome address and also to give us an intro to the training of today. Sir, I want to please request that you kindly unmute yourself to give us the opening remark.
Okay, Assalamu alaikum wa rahmatullahi wa barakatuh. I wish to welcome all of us to this edition of our continuous development program, which is one of the key activities of the Institute, as the Institute of Islamic Finance Professional, which majority of the people here present here today are members. This edition is an hybrid sort of, in the sense that we also have non-members with us today. It's a public event, and so it's an open event. It's not restricted to members alone. However, members that are present here today will enjoy and get benefit for attending, which is that they will get credit unit allocated to them. This is also an event that is free. Like you all know that we do paid and free events, and we rotate it throughout the year. So this edition is a free event, but the one that will be coming next will be a paid one. However, the event itself is not about paying or no payment, but it's just about members attending and getting, enlightened and on the development in the industry where we belong, the Islamic finance industry. We make it mandatory for members to attend, because when you become a member and you stop learning, then you really do not have the basis for carrying the certificate that you are holding, whether as an associate or a fellow or a research member or a graduate member. So that is why it is important that you attach importance to this program events, and it's sort of mandatory for all members to always look forward to and attend it. I would want to welcome all of us to this event, both those are members who are based here in Nigeria and those who have joined from outside the country. I have a very strong belief that we're going to enjoy it so much, because the topic we have brought up to discuss today is one of the important area that we need to discuss, and that is risk management in the midst of risk exposures. We have invited speakers who will be doing justice to this the subtopics, which are one of them is the risk management in Islamic financial institution. What are those risks, and how are we going to mitigate those risks? Then the second topic is Takafu as a risk management tool for MSMEs and families. So we're going to look at that also later on today. And our facilitators are very much with us now. So they're going to be alluding to the topics that have been assigned to them. I want to enjoy us to listen with rapt attention and get the message that they will be delivering to us. I also want to say that there are rules for this event. When you are not allowed to talk, please be on mute throughout the program. So if you want to talk, you signify, and the moderator will let you talk and will allow you to talk when you've been allowed to talk. So let us, uphold this rule. Another thing is that one of the things that has been, that is common with this kind of virtual training is that the level of concentration is usually low, but we need to pay much attention to what will be discussed this morning. And I wish all of us a fruitful program this morning. The hours we'll be spending here, I pray Allah subhanahu to make it beneficial for us. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, sir, for that introduction and a bit of insight into what our participants should be expecting for this training. And at that, I'm not going to waste any other time than to invite one of our lead associates at the Institute, in person of Ijia Odeshina Wasilat, to kindly take over, who she's going to be the one to anchor the training part. So I want to bow in recognition of Ijia Wasilat so that she can take the speaker from there. Ijia Wasilat, can you hear me, please?
Yes, please.
Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Alhamdulillah Rabbil Alameen. We are all welcome to this our CPD event for today. As we are aware, the topic for today, the theme of the topic is more on risk management. Most of us, we know how it is. Some of us, we've gone through a lot, and it's better for us to manage this risk so that it can limit some things that they are natural, and there are some things that we can easily afford so that our businesses and everything can go smoothly. For the first lecture for today is risk management in Islamic financial institutions. And this is going to be done by Malam Aliyu Buhari Ali. He is the head micro, small and medium enterprises of Jais Bank, Abuja. I'll quickly do his citation, and for the next lecture later on will be by Mr. Ishaq A. Afolabi, and his will be on Takaful as a risk management tool for MSMEs. And one of the things that the Institute is trying to do is for its members to understand and to be able to be conversant with topics that are related to their career development. So on this note, let me quickly do the citation for Mr. Ali Buhari Ali. Mr. Ali Buhari Ali holds a master's degree in Islamic banking and finance from Bayero University, Kano in 2014. He has a postgraduate diploma in Islamic banking and insurance from the Institute of Islamic Banking and Insurance, London, United Kingdom in 2011. He is an HND holder in marketing from Kaduna Polytechnic, Kaduna, which he got this in 2005. He has worked with Ududulai Microcredit Company Limited, managing multi-million naira microcredit financing portfolio, where he resigned as a senior investment officer. That was from 2007 to 2010. His journey into the insurance industry dates to 2003, where he had brief stints with Nikon Insurance PLC. Mr. Aliyu currently works with Jais Bank as the head micro, small, and medium enterprises department of the bank. He supervises four teams under the following units: financial inclusion unit, agency banking unit, specialized partnership unit, that is development finance institution like CBN, Bank of Industry, DBN, and International Islamic Development Bank. Then the fourth one that is under him is SMEs, aggregators, and cluster units. He has been a member of the team that is coordinated disbursement of about 60 billion naira to over 30,000 MSMEs. That's 2019 till date. If if you have a small business and you have not keyed into this, I think today is one of the, I think you can get in contact with him on how to do that anyway. Then he has really opened different accounts for Mudaraba Partnership account to over 10,000 rural women under JAI's Financial Inclusion Pilot Program. And he has done, he has assessment of Bank of Industry 3 million intervention fund, CBN intervention fund, and Islamic Development Bank, Brave Women 4 billion funds program. He has vast experience of credit and financial analyst, risk advisory and marketing and customer support, and has made several presentations, attended many courses relating to MSMEs, insurance, takaful, management, and marketing. Mr. Ali is a trained expert on entrepreneurship and SMEs by Kaduna Business School. He's a certified Islamic specialist in takaful by Council of Islamic Banks and Financial Institutions, Bahrain, and is a member of Arab Institute of Accountants and Legal United Arab Emirates, and an accredited licensed takaful professional by Knowledge and Human Capital Development, UAE. He's also an associate fellow of Institute of Islamic Banking and Insurance, London, United Kingdom. He's an associate member of National Institute of Marketing of Nigeria. He's an associate member of Advertising Practitioners Councils of Nigeria. He's an associate institute of strategic management, and is also a member of Nigerian Institute of Management, and is also a member of both prestigious Chartered Insurance Institute of London and Nigeria, among others. He's happily married with 3 blessed boys, regarded as Baba or boys, you know. So anyway, we welcome Mr. Ali to this our CPD, and we hope that it's going to, with all this qualification, definitely it's going to do justice to the topic for us. It's going to enlighten us more on risk management in Islamic financial institutions. Once again, Mr. Aliyu, the floor is yours. Thank you very much for joining us, and we welcome you once again. Thank you. Assalamu alaikum.
Alaikum salam wa rahmatullahi wa barakatuh. Good morning, everyone. Thank you very much. I remain Ali Buhari, my humble self. While the citation was going on, I was wondering how and when did all that came to be. But then without really giving thanks to Allah subhanahu wa ta'ala, it is in his own mercy and wisdom that I was able to come this far. And of course, this will not be complete without acknowledging the support from my supervisors. And over time, I think one of them, in person of Mr. Momo Diouf from Gambia, is also on this call. If I can remember, I saw him somewhere. So this must be acknowledged. And of course, many others here locally. We sincerely appreciate our scholars for giving us the guidance and support. So inshallah, with this introduction, I want to also welcome and appreciate all members that are on this call for this very important discussion. Of course, there is no any other time than this to discuss this topic. We know I don't know if I can be given permission, or maybe the institute to share my screen, or maybe is the institute going to be moving with the slides? So, okay. So, like I was saying, we're in a very volatile economic.
Permission to share, sir.
Okay, so that I will be able to. So as I was saying, there's no any other time better to have this conversation other than now, because the economic environment is really in a very difficult situation, in the sense that prices, economic impact, and so many other things have been adversely affecting businesses. So Islamic financial institutions need to really understand some, and also not only Islamic financial institutions, but businesses alike need to understand some of these risks that are that we have been exposed to, and see how we can really manage them and get over them. So I'll try to see how I can really make the presentation to be very straight to the point and very impactful and beneficial. I pray may Allah accept it as an act of ibadah from all of us. We that giving the presentation, the Institute for providing the platform, and all those members that are with us either online or maybe are unavoidably absent. So inshallah, the presentation is going in this outline. Firstly, we need to even understand what we are talking about, so that at least we have a clear perspective and understanding of what we're expecting to do. So firstly is to look at what is even risk and the concept behind risk. Then what is risk management? Of course, then general risk classification. We'll also look at risks unique to Islamic finance. And then we have about 15 risks that Islamic financial institutions have been exposed to. But we've been able to single out about 3 of them. The presentation, I think, if we are given the 2 hours or even beyond that to discuss risks, it may not be sufficient. But the fact that we know the realities on ground, so we've been able to, out of those 15, we'll discuss on others very briefly, but discuss extensively on these 3 major risks, inshallah. So to start with, firstly, we'll be looking at what even the risk is. Just like the way I mentioned, risks are uncertain future events that will influence the achievement of the financial institution, be it an Islamic bank, be it a takaful company, be it a capital market operator, or as the case may be. Of course, anything that will influence achieving the objectives, including strategic, operational, financial, and compliance objectives, then it's a risk that must be understood and adequately taken care of. Otherwise, there's implication that will follow for not managing that risk. So uncertain future event could be one: failure of a borrower to repay a financing, fluctuation of foreign exchange rates, fraud, incomplete security documentations, etc., non-compliance with Sharia law and principles, other event that may result in loss to the Islamic financial institution or Islamic bank. So with that understanding, we are just trying to have a very good, we are still trying to bring out more clarity to what risk is all about. A bank's business, whether Islamic or conventional, is to take calculated risks. So not only banks, but every financial institution, be it at a careful, you are trying to take policies, you are trying to take businesses. So you have to take calculated risks. As such, risk management is not the minimization of losses, but the optimization of the risk-reward equation. The competitive advantage of a bank is dependent on how well it manages its risks. So whether, I'm sorry, maybe I'm from the banking perspective, even though a very good chunk of my years has been in the insurance, but probably the fact that my colleague will be discussing that from the takaful angle, maybe that's why my presentation may be slightly inclined to the banks and other related entities. However, I'll try to balance so that my foundation will not feel Ali has gone and left us in the insurance. We are together, and inshallah, we will continue to see how we support each other in achieving the Maqasid Sharia. The concept of risk hardly needs any definition. Now we are trying to even understand from the definitions, we've been able to see what risk is all about. However, its meaning is plain and almost the same as understood in everyday conversation. If someone were to say there's risk in something, those listening will understand his talking about a situation where there's uncertainty as to the occurrence of a desired result, and the probability that the consequences will be something undesirable. Once you hear risk is being discussed, of course, the fear is there's something undesirable that is likely to happen. So in that situation, efforts are being geared towards really minimizing it or managing it as the situation may be. The meaning is not far-fetched from above perception when used in financial world. It refers to a situation in which two or more outcomes are possible. It is therefore clear that condition of only one outcome bears no risk. Whatever is certain has no risk. So what is risk management process? We'll be looking at, for you to be able to evaluate risk management and to be able to manage it properly, then it is expected that these key parameters are being clearly reviewed and evaluated. Firstly, you have to identify the risk. What is the risk in the first place? Then two, you have to measure it and assess it. What will be the impact? To what extent will it hit? And many others. And this is not only even, it's important, let me even make it clear here, this this evaluation or review shouldn't just be for our financial institutions, but even from our personal life and personal life journeys. Of course, we have been exposed to so many circumstances. So in every situation, if we're able to manage or review it based on these four parameters, I bet you, inshallah, the impact will definitely be, if not mitigated completely, but grossly managed, inshallah. So you have to identify the risks, then measure it and assess what could be the impact if it happens, then mitigate and control. Try to look at what are those things that you can put in place to reduce the impact and also control it, then report and monitor depending on the situation. So we are still on it. Once you are looking at risk identification, you have to look at, these are the key parameters to look at. Under identification, you have to look at external event. Is it new product? Is it acquisitions? Is it changes to business processes? So you have to identify what are the exposures as a result of this and many other likely incidents that will impact. Then the next thing is to do the assessing. For you to assess risks, what is the likelihood of it happening? Then what is the impact if it happens? What are the inherent and residual situations and considerations that needed to be taken care of? So that will now give you a clear picture of the position and situation of that risk, and now guide you to now move to the next stage, which is how do you mitigate? Is this something that you can avoid? If it's something that you can do away with it, avoid it. You want to travel, and then you have been told that particular route that you want to intend to follow is very dangerous, or maybe there's a lot of, it's very dangerous to follow. So in that situation, you are now left with the option of, are there other routes to follow? The journey I intend to do, must I do it? Are there options that I can explore than that? So these are all the things that should come into your mind. Is this something that you can transfer? Then mitigate by controls, accept, reduce residual risk. Then of course, the last one, like I mentioned, is the monitor and reporting. The KRI's key risk initiatives to manage loss data, issue management, risk appetite, and others. So the monitoring and reporting for financial institutions will help them to be able to know their position at every point in time. So with that, they are being guided, and then the cycle keeps going on and on. It's a cycle that keeps moving as far as there is life, or maybe the business continue to exist. So this just try to explain the processes on risk management. What do you need to do? How do you need to do it? What are the steps that I need to take? And many others. So now we are moving to the next item, which is the risk classification. For risks, majorly authorities or researchers have been able to bring it out that we have two major types of risk classification. One, we have the financial risks, and then the second one is the non-financial risks. Of course, the financial risks are the ones that will directly impact on the income or the business, while the non-financial risks are the ones that impact on the processes and what have you. Amongst them, we have the market risks. The risks originating in instrument and asset traded in well-defined market. Astaghfirullah, I can see interest rate, but then for us in Islamic finance, rate of return risks, the exposure of banks of Islamic financial institutions, conditions of movement of rates, credit risks, the risks that counterparty will fail to meet obligation timely and fully in accordance with the agreed terms. Then investment risks, uncertainty of achieving the returns as per the expectations of the investor. These are just a few that have been identified under the financial risks. Then under the non-financial risks, we have one, the operational risks, the risks of loss resulting from inadequate or failed internal processes, people or system, or from external events. Then we have regulatory risks. Of course, you know, for you to operate within the financial system, be it capital market, be it banking, be it insurance or any other arm of the, it's a sector that is highly regulated. So the risk that arises from changes in regulatory framework of the country. Then, of course, example is the one, okay, sometimes back we have the microfinance capital base 20 million, and now it has been moved to 200 million. So all this, depending on the type you are trying to microfinance, or maybe insurance, or is it takaful, or maybe the banking business you are intending to do, that will determine the impact of some of these regulatory changes to what you are doing. The legal risks, the risks relate to risks of enforceability of financial contracts. So we're still on, beside the risks that conventional banks face, Islamic banks have to deal with additional type of risks. Of course, it's important. The focus of our presentation today is looking at the risks Islamic financial institutions have been exposed to and how they will be able to manage that. Of course, for anything you are doing, some of these risks are general in the sense that they affect both conventional institutions, but some of them are specific to Islamic financial institutions, and I'll try to do explanations on that. Number one, we have the markup risks. Of course, for you to make any income as a financial institution or as a business going concern, definitely you have to, your income is the key. And for us in Islamic finance, because we don't charge interest, so in some of the transactions, we are looking at markup. So Islamic financial institutions use a benchmark rate to price different financial instruments. For example, in a Murabaha contract, the markup is determined by adding the risk premium to the benchmark rate. The nature of a Murabaha is such that the markup is fixed for the duration of the contract. Consequently, if the benchmark rate changes, the markup rate on this fixed income contract cannot be changed. So what this markup rate is just trying to explain is that with the example of a Murabaha contract, for example, you buy, you approach an Islamic financial institution to buy an item, let's say what 100,000 or what 1 million, and then you are being charged, let's say 20%. That is an average of, let's say 100,000. So that is 1.1 million now. So this is what you have to pay back the Islamic financial institution. So in the event there's any change in the benchmark, or maybe the MPR changes the rate, the interest rate, of course, for this transaction, because of its nature, there's nothing you can do, because it's a one-off sale contract, and once it is consummated, everything is done. So unlike in interest-based transactions where you can go back and be able to increase the interest, in fact, it's a condition in the contract that interest rate is subject to prevailing interest rate. So they don't have any cost even to get back to you that the interest rate has been increased. So in that situation, your facility or your loan is going to also be jacked up. The second one is liquidity risk. Liquidity risk arises from either difficulties in obtaining cash at reasonable cost from borrowings, or sale of assets for a number of reasons. Islamic banks and other financial institutions are prone to facing serious liquidity risks. Of course, you have to be looking before you can be able to move. Issues of payment of salaries, issues of payment of overheads, and other, even in Islamic banks, to be able to advance loans, if you don't have the much deposit liquid, you will not be able to do that. So these are risks that must be acknowledged and be reviewed. Withdrawal risks, a variety of rate of return, savings on investment deposit, introduces uncertainty regarding the real value of deposit. Asset preservation in terms of the risks of loss due to a lower rate of return may be an important factor in depositors' withdrawal decision. Of course, this is a risk where once either the rate of return or maybe some certain situations in the market are affecting businesses, the tendency of making huge or maybe mass withdrawals is there. So this has to be adequately looked into so that it doesn't give room for issues. The financial system depends a lot on confidence. And once there is doubt, or maybe there is a shake on the confidence of that, panic withdrawals and all that, at the end of the day, may have a very serious negative impact to a financial institution. Sharia non-compliance risks is the reason, if Sharia compliance is the basis Islamic financial institutions exist. If a firm isn't adhering to Sharia principles and guidelines, the impact can be severe, because once the members of the public are not comfortable to the level of compliance of an Islamic financial institution, then there's problem. If one or more Islamic indicate that an Islamic firm is veering away from compliance, its reputation will definitely be at serious risk. So this is something that has to be seriously managed and looked at from time to time. Then we have fiduciary risks. Risks can be caused by breach of contract by the Islamic bank. For example, the bank may not be able to comply fully with the Sharia requirement of various contracts. So this is really a concern, and there's no customer or there's no business partner that will be happy or will be comfortable to deal with an Islamic institution if they observe that there are situations or challenges that will not be allowed to explore all that. Then for it to be fully Sharia compliant. Then we have the displaced commercial risks, market risks as well, and many others like I mentioned earlier. In addition to all these risks, the Islamic financial institutions are also having challenges of bundle risks in situations where by the time, at the time of going into a contract, you are being exposed to one particular risk, and then at the end of the particular contract, you are moved from one other risk to another, or maybe even the two are coexisting. So it is common for the various risks to be bundled together. However, in the case of most Islamic modes of finance, more than one risk coexist. For example, in Salam, Once the bank has made an advance payment, this is a transaction usually being used for agri-related transaction. It's more of a future sales. Islamic financial institutions use it majorly in agri-related businesses, where you pay and advance the farmer, and then he pays you in kind at the end of the harvest period. So it has started to take the counterparty. Once the bank has made an advance payment, it has started to take the counterparty risks concerning delivery of the right commodity on time. The market risks of the commodity, the liquidity risks of its conversion into cash, the operational risks of its storage and movement, etc. So you see, in one transaction, you are already seeing like almost 4 or 5 risks that are bundled together in one transaction. So these are really issues for Islamic financial institutions that we must have to adequately look at. Some of the nature of risks faced by Islamic financial institutions and banks is complex and difficult to mitigate for different reasons. One, unlike the conventional banks, given the trading-based instrument, for them, the moment there is a change in rate, they adjust their rate easily. But in Islamic financial market, you don't do that easily. So there are so many implications. Based instrument and equity-based financing. There are different significant market risks along with credit risks in the banking book of Islamic banks. Risks intermingle and change from one kind to another, just the way I explained. For example, trade-based contract now, like Murabaha, Salam, and Istisna, and leasing are exposed to both credit and market risks. For example, during the transaction period of Salam contract, the bank is exposed to credit, and at the conclusion of the contract, it is exposed to commodity price risk. Because of rigidness and deficiencies in the infrastructure, institutions, and instruments, the risks faced are magnified and or difficult to mitigate. There are objections to the use of foreign exchange features to hedge against foreign exchange risks, and there are no Sharia compatible short-term securities for liquidity risk management in most jurisdictions. Nigeria not an exception, but Alhamdulillah, I think with the sovereign sukuk and with some of the sukuk being introduced by some of the private sector, I think we are getting to manage this exposure. So basically, these are some of the risk profile of an Islamic bank or Islamic financial institution, as the case may be. Like I mentioned to you, we have about 15 of them, or thereabouts, which of course in some situations they can be much. I think there's interference. Maybe the admin can look at that and manage it so that. I hope I'm being heard loud and clear.
Yes, that is cracking. It's cracking.
Okay, it's all right. I think there's a distraction by one Sanya. That's the challenge. Alhamdulillah, he's back again. So under the risk profiling, financial risks, we have the credit risks, market risks, markup risks, liquidity risks, asset liability mismatch risks, equity risks. Then, of course, under this for Islamic banks, assets and liabilities, you have to get a match. The funds you are getting in must match with the assets that you are creating. So in that situation, it will really go a long way to manage this exposure. Then under business risks, we have rate of return, displaced commercial risk, solvency, and what have you. Then under governance and corporate management and corporate governance, we have operational risks, we have transaction risks, fiduciary, Sharia compliance, reputation. So these are just the risks exposed by Islamic banks and other related institutions. Of course, from the presentation, it is very clear to understand that with all this exposure, no matter how you look at it, whether just by this, what you are seeing on the screen, whether it is half full or half empty, you are speaking the same thing. So the basic thing is for Islamic financial institutions to really have a very good understanding of such risks, and then be able to now see how they can be able to mitigate them and manage them so that at the end of the day, they don't impact negatively to their performance. So we'll just quickly look at the investment risks and move just like I mentioned, investment risks, liquidity risks, and credit risks. Because of course, these are key things for financial institutions that needs to really look at. Otherwise, it will really have a serious impact. So investment risks can be defined as probability that actual return on an investment will be lower than the investor's expectations. All investments have some level of risk associated to it due to unpredictability of the market's direction. Simply saying is, it's a measure of the level of uncertainty of achieving the returns as per the expectations of the investor. So it is the extent of unexpected results to be realized. So these are what we are, the exposure as far as the investment risk is concerned. Majorly, there are 4 classes, and each one also come with its own risk. One, we have cash, which is majorly the liquidity. Then 2, we have shares, equities. 3, we have property, and 4, we have bonds. So these are some avenues that we Islamic financial institutions always look at when we talk about investment. For number 1, cash is the least risky of the 4, but it tends to deliver low returns, which means the value of your money can be eroded in times of high inflation, e.g. keeping your fund in savings account. Of course, we can all see that in current realities. The inflation is really hitting that. In some instances, I used to hear friends saying that it's better you even buy a broom and keep than to keep your money, because 100 naira of today, by tomorrow when you go to market, if you are able to buy a broom of 100 naira, tomorrow when you go to market, it will be 120. So your 100 naira kept is far, far below the reality in the market there. So in any case, all these have their own implications, and you must weigh them. Of course, you cannot run away or do away with all of them, but you have to really look at, because if you don't have the liquidity also, there are situations where you need the cash to consummate some transactions. And if you run away from keeping cash because of issues of inflation, then you now go into another trouble. So as we'll see as the presentation goes. Then we have Sukuk bonds. One step up the risk ladder is government sovereign Sukuk, followed by investment grade corporate bonds, where you effectively lend money to large companies in exchange for a fixed return. Of course, for some of us that have been able to key into the Sukuk, the sovereign Sukuk, you want to believe we have been very excited with those decisions taken. And that's why, alhamdulillah, anytime Sukuk is being put on the table, they are always highly or grossly oversubscribed. Then investing in property, commercial property such as mortgages, supermarket, warehouses, can grow your money through rental income and growth in the value of the property you own, but can be illiquid, meaning that many at times you find businesses with so much assets and properties, but there is no liquid. And I can remember during the mergers after the bank, the review of the banking policy, when there were mergers, some banks came with a lot of assets. Yes, they have a lot of assets, but because they don't have liquidity, that gave them a lower edge in terms of negotiation on what goes forward. These are some of the implications, and risk managers and business decision makers will have to definitely look at all this to be guided. Then we have the equities. Shares, also known as equities, are seen as the most risky asset class, as stock markets can be highly unpredictable, but some markets are considered riskier than others. Investing in developed markets such as the UK and the US is considered relatively safe, and other climes, although this market contain their share of higher risk options too. While emerging markets such as Brazil, China, India, equities are likely to be more volatile. And that also applies to our local environment as well. In African jurisdiction, there are locations where the markets is much more higher, and then there are locations where you have more relative exposures. Buying shares in geographical regions less frequented by investors can be expensive, and shares can be comparatively illiquid, because by the time you need your fund, you may be unable to get someone that will be that is interested in buying, and that will definitely affect. So key things to know when you are looking at or reviewing investment risks. One, the greater return you want, the more risks you will usually have to accept. Then the more risks you take with your investment, the greater the chance of losing some or all of your initial investment or capital. Of course, there are so many situations that we've all had similar experiences. If you are saving over the short term, it's wise not to take much capital risks. So what you are investing for and when you will need access to your money will have a big impact on what types of investment are right for you. If you are investing for the long term, you can afford to take more risks as your money has more time to recover from falls in the market. So if you are looking at short-term risks, then honestly, it's not wise to take to go into the capital market, because you may be lucky. The time you go is when the market is very good, and then you enter it briefly and get out with good returns. But in most situations, because it's a market that has a lot of fluctuations, long-term investment are much better, because whatever short comings there are there, the long-term will be able to get it and recover. Investing in share-based assets has historically proven to be the best way for providing growth that outstrips inflation. There's a risk attached, but when you invest over the long term, there's more time to recover your losses after a fall in the stock market. So we are now going to liquidity risks, which is second to the last, and we'll be looking at what do we mean by liquidity. Someone was hearing us talking about liquidity, and he was like, "What are you guys saying?" He didn't he didn't really get to understand what do you mean by being liquid and all that. So liquidity risk is a risk that a company or a bank may be unable to meet short-term financial demands. Already have this conversation. This usually occurs due to inability to convert a security. You may have the asset, you may have the properties, you may have everything, but when you need cash, all your assets, your properties, your valuables will not be able to be helpful, because the implication is at that time, you may have to either sell them at a very discounted rate, which will not be good for you. Or hard asset to cash without a loss of capital and or income in the process. So these are some of the scenarios that will play out when you are having to manage liquidity risks. Liquidity risks generally arises when a business or individual with immediate cash needs holds a valuable asset that cannot trade or sell at the market value due to lack of buyers or due to an inefficient market where it is difficult to bring buyers and sellers together. So I've already discussed this. So liquidity risks can be categorized into two major types. One, we have the funding liquidity risks, and two, we have the market liquidity risks. Funding liquidity risk is a risk that the Islamic financial institutions will not be able to meet efficiently both its expected and unexpected current and future cash flow and collateral needs without affecting either daily operations or the conditions of the Islamic financial institutions. For some of us that have been in the system, not even only the Islamic financial institutions, but business generally, once you have been able to reach to that level, you know what funding liquidity risk implication is, because the month end will come once it is 25. Already there's tension because there is no liquidity. You have all the asset, but there is no liquidity to pay staffs, and staffs will be looking at you left and right, trying to see what will happen, because all they can understand once it's anything 25 to 30, which is the period we're rightly in, is for them to get their alert for what they've been able to do for you within the past 20 or 30 days. So no matter how strong you are in terms of asset, valuables, and what have you, once this issue is not properly managed, then definitely it will expose the financial institution or the business into some very costly embarrassment. In some situations, some staffs may find it difficult to keep going because they will feel once their pay is not guaranteed on that payday, then there's a problem, notwithstanding the position of the business. Then we have the market liquidity risk, which Islamic financial institutions cannot easily offset or eliminate a position at the market price because of inadequate market depth or market disruption. These two have strong interactions. So managing liquidity risks. For banks, they may face funding liquidity risks due to unexpected withdrawals or transfers of funds by its investment account holders and depositors for several reasons, including reduced creditworthiness, displaced commercial risks, Sharia non-compliance, or reputational issues. Once this thing sets in and people began to start withdrawing their funds, liquidity issue will set in. And once it sets in, then there's a problem. This is for banks. And for other takaful or maybe other businesses, once the businesses are not able to generate as much business as possible, then they may be constrained to be able to pay their obligations. The bank or maybe the Islamic financial may also face increased liquidity risks due to operational and information system failures of counterparties or because of problems in payment and settlement system, resulting in late payment or non-payment of funds due. So still trying to look at how we'll be able to manage liquidity risks due to gradual growth of financial instruments. Alhamdulillah, I mentioned it earlier with the sovereign sukuk and with some sukuk being floated by some corporates. It is difficult for Islamic banks to quickly draw funding from the financial market because there is no independent inter-Islamic bank money market. Alhamdulillah, I think when JAI started years ago, before the coming of the new players into the market and other players, it was really very difficult for it. And that has really had a lot of impact to its growth because, of course, it plays alone and it has no any other place to go other than CBN. And by the time it goes to CBN, CBN provide liquidity based on interest, and it may be very difficult. It's really not allowed for it to be able to access those liquid instruments. So in that situation, that has really affected that. But then, alhamdulillah, notwithstanding, we must appreciate. Yes, we are almost rounding up. Wa alaikum salam.
All right, please be rounding up, sir.
Okay, it's all right. I know you took almost 10 to 15 to 20 minutes of my time, but inshallah, we'll do justice to make sure that in the next 5-10.
All
yes,
right.
we didn't start at schedule, but then I'm almost rounding up, inshallah. So,
all right, thank you very much, sir.
Yes.
Thank you.
A distinctive feature of Islamic Bank is the obligation to conduct operations in accordance with Islamic Sharia principles. Of course, knowing that the prohibition of riba, which is like the basic understood as any sort of increase, just trying to explain what riba is considered to be the most fundamental Sharia principle that Islamic banks must follow. As a result, transactions conducted cannot be based on interest. This principle applies to money market operations, takaful, and all other related businesses that are essential for managing the bank's liquidity. So what are the instruments being used? I will just quickly run this through. One, we have the commodity murabaha. Of course, you know, Islamic banks are allowed to do trading. So this has been very helpful, and as the case may be. Then we have interbank placement of fund under various profit sharing arrangement and Islamic mutual fund. Of course, with coming of Islamic capital market operators, with the coming of takaful players, with coming of other players in the banking, we have a number of other Islamic banks and other microfinance banks. So with all this now, I think I know there has been discussions on trying to see how there will be interbank placement of funds. And this will really help a lot. Islamic Government Investment Certificate, which is the Sukuk and short-term Sukuk, as the case may be. So summary, senior management of Islamic financial institutions and not only Islamic financial institutions, but businesses should ensure that liquidity risk is effectively managed by establishing appropriate policies and procedures. The Islamic financial institution or business must have an adequate information system to measure, monitor, control, and report liquidity risk. Regular reports and liquidity should be provided to the board of directors and senior management. This report should include inter alia the liquidity positions over a particular time horizon. Then development of secondary market sukuk issues involve increasing the flow to shorter term, sequence of fund instead of demand deposit. So the last one is the credit risks. Under the credit risks, what we will be looking at, firstly, to understand what credit risk is all about, is the potential that a counterparty fails to meet its obligation in accordance with agreed terms. Then in these Islamic financial institutions need to manage credit risks inherent in their financing and investment portfolio relating to default, downgrading, and concentration as well. Credit risks comprises of default risks, spread risks, recovery rate risks, downgrade risks, and concentration risks. These are all things that has to be adequately looked into for it to be properly managed. Under default risks, the possibility of income loss due to delay in payment and non-payment of credit and profit in full. Default risks also causes market risks and liquidity risks. Default risks covers over 80% of risks in an average bank's banking book asset portfolio. Then it is the cause of over 80% cases of bank failure. Alhamdulillah, I think the regulators have been very up and doing recently with the CBN and NDIC looking and doing close monitoring and all that. I think the bank failures has been something of the history. Of course, there may be a few buckets, but not like the way it used to be in the 80s and thereabout, where there's mass bank failures where you just wake up and then you see a number of banks being down. The success or failure of any business is largely affected by the ability to manage the risks associated with it and to minimize these risks as much as possible. The need for risk management in Islamic finance is not an exception. However, Islamic system of finance rejects some of the conventional techniques and tools of risk management due to their involvement in riba, gharar, or excessive speculation. So going to rounding up, it's important to get this quote from the Institute of International Finance. The norms and traditions of behavior of individuals and groups within an organization that determine the way in which they identify, understand, discuss, and act upon the risks the organization confronts and the risks it takes. So you see what this phrase or comment is saying is just that, of course, put all the mitigant, do all the review. If you don't have the right people to handle risks appropriately, then of course you will not get it right. So this is something that is a takeaway for all businesses, not only the Islamic financial institutions, so that we are being guided appropriately. Then of course, we have to look at managing that horizontal information sharing among peers, among colleagues, among supervisors and what have you. Vertical escalation of threats or peers to superiors and supervisors, continuous and constructive challenging of the organization's actions and preconceptions, committed leadership, incentives that reward thinking about the whole organization. Of course, for you to manage risks, you need to have good thinking, because it's not just about analyzing all these risks. Some of these are information that you pick on the street. You see someone and then maybe you just pass a comment about an institution or a business, and you will be amazed if the impact if that maybe comment or response is being taken into consideration adequately. So any information that is coming as far as it's about risk management must be adequately scrutinized and reviewed and considered. Some of the techniques: know your client, enhance due diligence, application of scoring models, of course, in taking risks, if it is for the business, in the banking, if it is the careful, know the limits, the type of risk, your risk appetite, what you want to take, what you don't want to take, investment in capital. When do you go for short term if you're operator in the capital market? When do you go for short-term instrument? When do you go for long-term instrument? These are all things that must be adequately taken care of. Then Sharia compliant enforceable collaterals and guarantees, clear documentation, operational considerations, proactive monitoring. Credit risk management. One, credit related operational risks. We have they are higher in Islamic banks and conventional banks because, of course, the levels, like I mentioned earlier, are much more. Complex contract limited to knowledge by staff, systems sometimes not accommodative. If we are not trying to get the meanings of all this murabaha, ijara, and all that, a lot of even the Muslims will find it difficult to even understand what we are even discussing. So a lot of this engagement is really required so that we are all on the same page. Cancellation risks in non-binding murabaha and istisna contract, cancellation risks in non-binding contract, difficulty in enforcing Islamic contracts, Sharia non-compliance, commodity inventory related operational risks in case inventory is sold. Some Sharia compliant techniques just for consideration: pledge of assets must be Sharia compliant and monetary value may be underlying or on the other asset, that is the asset that is being bought, or maybe any other asset. Then third party guarantee without any consideration received from guarantor may or may have recourse to debtor, may be or there, or cash as collateral in case of default by lessee. So credit risk monitoring techniques, credit and customer profiling. We'll see brief details in the next slide. Watch listing of customers, proactive monitoring, early detection system, post-mortem reviews, sector reviews, so that you know the sectors that you have strength, the sectors that are giving you best result, the sectors that you have, if it is insurance or takaful, you look at the businesses that have low claim ratio. Then you look at also those with higher rates, contribution rate, and bringing more income with less claims. Sector reviews, stress testing as well. Then lastly, we'll be looking at credit collections and recovery. Under collections and recovery, collection, a procedure aimed at obtaining the repayment of debt after the obligation due date, preventing account from being impaired or lost. Recovery, a process to collect money still owed on account after the financial institution or business has classified the account as impaired or has written off the account as a loss. So under recovery, maintaining delinquencies losses within acceptable limit, generally loss recoveries at desired levels, counsel clients who are experiencing difficulty in handling debt, ensure consistency with financial institutions' objective, manage collection and recovery costs. This is basically because, you know, we mentioned a very good chunk of reasons why institutions are failing is issues of bad debt and of course claims, high claims in takaful, and then of course market volatility in capital market. Collection tools and applications. We have collection system to assist better management of delinquent account, reminder letter, auto dialer, short messaging, internet and email, outsourcing to external agency, legal action, internal reschedule and restructure. So these are just the final to look at in terms of managing non-performing, very challenging, ensuring that your businesses are being managed. If it is takaful, you don't underwrite 100 policies today, and then by next year, yes, you get another 100, but another 50 are new, why you are unable to retain the current portfolios of businesses that you are having. So all these things requires a lot of concerted effort and what have you to ensure that you are adequately within the limits, inshallah. So with this, I say thank you very much for having me, and I hope I've been able to do justice to the presentation. أقول قولي هذا أستغفر الله لي ولكم كل مسلم كل ذنب إنه هو الغفور الرحيم. Thank you very much, and thank you. جزاكم الله خيرا.
Thank you very much, sir. Jazakumullah khairan. May Allah reward you abundantly for that lecture. And we are sorry for taking much of your time. And with this, we are supposed to do the question and answer section, but because of time, we are going to do this question and answer section together with the second lecture. And I hope that you will be around to take some of the questions for you, sir. So we are quickly moving on to the second lecture for today. And our lecturer is already around now. His name is, our lecturer is already around that, Mr. Iifp Afolabi, and is going to talk to us on Takaful as a risk management tool for MSMEs and families. And to do the citation, I'm going to call on the lead associate for stakeholders, events, and management in person of Mrs. Momo Adoige. So please, Mrs. Momo Adoige, can you please do the citation for Mr. Iifp Afolabi? Thank you very much.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam.
Wa alaikum salam wa rahmatullahi wa barakatuh.
It's a pleasure welcoming you all once again to this in-course event of Institute of Islamic Finance Professionals. So, to do the citation of the guest lecturer for today, Mr. Iifp Afolabi Abolore, and to take the topic, Takafu as a risk management tool for MSMEs and families. Mr. Iifp Afolabi is a graduate of Business Administration from University of Lagos, Akoka, and a holder of Masters of Islamic Banking and Finance from Bahrain University, Kano. Equally obtained National Diploma in Insurance from Kwara State Polytechnic. He is also an associate of the Institute of Islamic Finance Professionals, associate of the Chartered Institute of Insurance. He has over 15 years extensive experience in the Nigeria insurance market. He started his insurance career with Africa Prudential Insurance Company Limited as a life underwriter in 2004. He later moved to Royal Exchange Prudential in 2008. He joined New Takafu Limited as head technical family Takafu in 2018. Nur Takafu is one of the Takafu insurance practitioners, operators in Nigeria. He left Nur Takafu to Salam Takafu, where he is currently working as the head of technical. We can see that he has vast knowledge in the insurance industry. He has moved from the cadre of the conventional to the Takafu industry, which is ethical in nature. And he's come to bring that knowledge to the Institute. Mr. Iifp Afolabi is an enthusiast life insurance underwriter and also a claim manager. So we are to welcome Mr. Iifp Afolabi to start his presentation. You're welcome, sir.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa barakatuh, sir.
First of all, I would like to appreciate the privilege given to me by Institute of Islamic Finance and Professionals. Thanks so much indeed. And also my other colleague, Mr. Alihu Buhari, he has done justice to the topic given to him. I pray to Allah subhanahu wa ta'ala to assist us. And without wasting much of our time, I'm saying Salamu alaikum wa rahmatullahi wa barakatuh to the audience. Because we have a limited time, I would like to quickly go into today's topic. And by that, I'm having a little technical issue here. I will appreciate if my slide can be shared. Hello? Hello?
Hello,
You can share.
if
You
you know
can
the
share.
slide, please try to share it.
Okay, okay, good. So the topic of today is Takafu as a risk management tool for macro, small, medium enterprises and family. At the program outline, we will talk about Takafu. What does Takafu mean? And equally, we will talk about operation and practice of Takafu. Then type of Takafu model, we will equally discuss Takafu products for MSME and family. And we will equally discuss Takafu as a risk management tool for MSME and family. More importantly, the role of Iifp, that is our great institute, in propagating Takafu products and industry at large. The next slide, talk about what is Takafu. We are all familiar with insurance because we grew up to know insurance. As a matter of fact, Takafu, insurance, conventional insurance has been in existence even before our independence, that we all grew up to know this conventional insurance. So I will always relate Takafu with conventional insurance. Conventional insurance, insurance is a risk transfer mechanism. That is, you transfer your own risks to the insurance company. Once your vehicle is being insured, the risk has been transferred from you to the insurance company. But Takafu means guaranteeing each other, mutual agreement, joint guarantee, share responsibility, mutual protection. These are what Takafu means. In Takafu, we refer to populace, the insured, as participants, that they've mutually contributed their common fund together with the purpose of having mutual indemnity in case of any loss. During the Stone Age, we all know what they call a susu, and even is being practiced to an extent at this particular era. Some people call it ajo. So ajo is a form of Takafu as well. People coming together to share their risks. This thing is being done in every profession as well. You might see some people, they will come together that we will be doing a susu, we will be doing ajo. So, and we will set aside some certain amount of money that if anything happen, unforeseen circumstances happen, we will take out of this fund and compensate someone that suffer losses. That is what Takafu is being structured around: mutual guarantee, shared responsibility. The next slide talks about, the next slide, please, talks about definition of tabaru. The next slide, please. Tabaru, it simply means donation. That is, for us coming together and donate for a purpose of solidarity. In Takafu, we have what we call participant risk fund. Once we receive contribution, we will set aside a certain percentage that goes into participant risk fund. The participant risk fund caters for unforeseen circumstances. If there's any loss, that is where we will pay the loss from. Takafu means a form of sincere donation given to a party without expecting any kind of exchange of return from the party. The next slide. As we talk about Takafu, there are some prohibitions. There are some no-go area that Takafu really emphasize. Such as the activities like riba interest. And we can't issue anything that is interest related. Anything related to tobacco, alcoholic, or any form of intoxication. It's a no-go area. And we will equally discuss the difference between insurance and Takafu. Please kindly help me change the slide to differences between insurance and Takafu. Hello? Hello? I hope you all hear me. Hello?
Yes, of course, we are hearing you.
Okay. Please, the slide should be changed to differences between insurance and Takafu. That is page 11. Good. So in conventional insurance, jurisprudence, they have no particular jurisprudence that they follow. But in Takafu, Takafu is Sharia compliance. On contract, conventional insurance is buy and sell transaction. But Takafu, we have varieties of model that we follow. We have Wakala, we have Mudaraba, we have Waqf. Then the obligation of the company. Conventional is only guaranteed to insured, while Takafu is a fund manager. It's a matter of trust. Your fund is being entrusted into the hands of Takafu operator. They are the trustee. Then guarantee given by the company, but in Takafu, mutual among participant base of joint guarantee. Compensation, that is, if claims occur, when a claim occurs relating to your car that you've insured. So in conventional insurance, they will pay straight away from company's fund. For in Takafu, your claims will be compensated from Takafu fund, which is called participant risk fund, where we have we have already assigned a particular account to take care of that. Investments, insurance company, they can decide to invest your fund in any form of investment, either interest, beauty of whatever. But Takafu is restricted to a Sharia compliance investment. On profit, in conventional insurance, profit belongs to the shareholders. But in Takafu, profit will be shared between participants. That is, the people that are insuring their properties with insurance company and shareholders. Conventional, they have no Sharia body, but Takafu, we have what we call Advisory Council of Experts. Advisory Council of Experts constituted by people that are knowledgeable in FIQ, that are very sound in FIQ. It is part of the parameters set by the regulator, NICOM, that before a Takafu company can be established, they have to equally have what we call Advisory Council of Experts that will look into the activities to ensure that it is Sharia compliance. Then, please, let's take the slide back to insurance. Takafu equals to insurance minus objectionable element. That is page 12. Page 12. As what we've said about insurance, some people do say, insurance and Takafu, is there any difference? Yes. if we have insurance and we filter the objectionable element from insurance, the results will be takafu. Please let us take the slide back to page 12. Page 12. Insurance, there is an element of garar, meza, and riba, gambling, uncertainty, and interest. Once we are able to filter this out, we have what we call takafu. Hello? Please, let's take the slide back to page 19, page 19. Page 13, page 13. Types of takafu model. We have in Nigeria here, we have we practice 3 different types of takafu model. Number 1 is mudaraba. And we equally have wakala, and we equally have hybrid. Let me briefly explain what mudaraba means. Mudaraba, it's a profit sharing. It simply means profit sharing. We have mudarib, that is the manager of the fund. We equally have capital provider. The capital provider brings money, that is Robol Mal, to Takafu company to manage. So Takafu company, we manage the fund, and at the end of the investment period, they will share the profit realized at the agreed proportion right from the inception of the contract. Secondly, Wakala model. The Wakala model is on page 15. Wakala, it simply means agency. We have Robul Mal, the provider of the fund, and we have Wakil, the agent to the fund. Right from inception, the manager of the fund, which is the Wakil, we have what we call commission. He will be entitled to a particular commission, the agreed ratio, right from the inception of the fund. His own is to manage the fund to ensure that the business is lucrative. Then the profit, the return on investment, everything will be given to the capital provider at the end of the investment period. Then we have hybrid model. The hybrid model simply involves the combination of wakala and mudaraba. That is hybrid model. Then we need to take a look at Takafu products for macro, small, medium enterprises and family. We have varieties of Takafu products. We have what we call family Takafu. The family Takafu takes care of anything that needs to do with either our health or investment aspect of the Takafu. The health team. Hello? Hello?
Go ahead, go ahead.
Please kindly share the screen. Then the second model, please kindly share the screen. Takafu product.
Okay, let me have
and family. Then we equally have what we call general Takafu. The general Takafu needs to do with our properties, basically our properties like house, vehicles, importation of goods, and equally the business that we are doing. Anything that needs to do with the business, we will equally touch that. Then we have agri insurance that needs to do with farm products or farm items. So first of all, we will take a look at family Takafu products. The most important aspect that we need to look at is group family Takafu. in conventional is called group life assurance. It is under the section 9 and subsection 3 of Pension Reform Act stated that for every employer of labor, it is compulsory for them to have in place group life for every employer of labor. If we are having an employee up to 5 employees, it's important for you to put in place what we call group life. What it does is that if any of your employee died during the course of this employment, and your company has already taken life assurance, group life, with any of Takafu company or insurance company, such insurance company will be responsible to compensate the deceased family. Once again, such insurance company will be responsible to compensate the deceased family 300% of the annual total emolument of the deceased staff. But most of in Nigeria, we are not that inclined to pursue claims payment. We are not that inclined. Most of the companies don't know the benefit, and what you pay is very, very small. And it is even not the employee that we pay. It is the company, the employer, that is mandated on the employer to pay. And what they pay is 6 per mil. That is, on every 1 million naira, they will pay 6,000 naira. We see how small it is. It is very important for every employer of labor to put in place group family takafu. The benefits are there. Our group family takafu provide one-off cash payment on the death of the employee to the stated beneficiary. The policy covers all employees or members of the group of the company. It covers deaths either through natural or accidental means. So these are the benefits. Another one we equally need to look at is credit takafu plan. It is called credit life in conventional. The credit takafu, it is a kind of plan that is it's giving protection to the people that have received facility from financial institutions, either like Charge Bank, Jais Bank, Lotus Bank, or some other financial institutions that give out facility. In conventional, we call it loan. Credit takafu plan. Let's assume you want to boost your business. You want to expand your business, and you approach Jais Bank. Jais Bank, I need 10 million naira to run my business, and you have been profiled. They've given you 10 million naira. They will ask you to go and take a credit life. In case debt is unpredictable, no one knows, and inevitable as well. No one knows the time. But in a situation whereby while you are repaying the loan, let's assume the repayment period is 5 years, and you've fully repaid 1 year, remaining 4 years, and debt occur. Who are the people that will be responsible to pay the outstanding balance of the loan? Then, what they used to do then is they'll be running after your family. The property that you've tendered as your collateral, bank will seize it. Bank will take over the property. We're on page 24. We're on page 24. Bank will take over your house, your building, your car, because while you are repaying the loan, the owner of the policy died. Bank will have no option than to take over your property. But no, it shouldn't be that, because the deceased doesn't have intention not to pay. The intention is crystal clear, willing to pay. But when death occurs, that responsibility to pay, Takafu company will step in and they will fully pay the outstanding balance. Now, we need to shed more light on this. It is the outstanding balance that will be paid, not what you are owing, intentionally owing before debt comes. It is the outstanding balance. So the benefit under Credit Takafu, this policy provides for the payment of an outstanding facility in the event of occurrence of death or critical illness or permanent disability or loss of job. It depends on how the policy is being structured. It restricts the financial institution from asset repossession or sales. It secures consumer loan holder against the financial risks of death, critical illness, permanent disability, loss of job before repayment of amount owed. Then the peak of it, it gives peace of mind to the beneficiary. You have the peace of mind that even for the facts that I've collected a facility worth 10 million naira from Jais Bank, if anything happens to me tomorrow, Salam Takafu Insurance Company, we pay back. Nuru Takafu Insurance Company, we pay back. Jais Takafu Insurance Company, we pay back. Bank will not be running after my family to take possession of my house or my properties. We can progress. Mortgage Takafu plan. Mortgage Takafu plan, the slide. Mortgage Takafu plan serve the same purpose with that of Credit Takafu, but mortgage is being used for anything property related in terms of house. Then we equally have Keyman insurance too, Keyman Takafu. So then we have Umura and Ziara. This enables Muslims that intend to visit holy pilgrimage. It enables them to save ahead. They will save, it's a savings. They will save ahead, then maybe after the expiration of the policy term, they will have their money with return on investment to enable them embark on the journey. We equally have World Travelers Takafu plan and some other family Takafu products. Let us quickly move to General Takafu plan product. General Takafu plan product. The first one we need to talk about is motor Takafu insurance. We are in Nigeria. We have three aspects of motor Takafu insurance. We have third party only. We have third party fire and theft. Then we have comprehensive insurance. So the cheapest of all is third party only. This is what they call, in insurance, we call it, police don't catch me. Because the purpose it serves, the third party serve is that why you are on motion. Let's put this into practical. And in fact, in Nigeria, our insurance awareness, Takafu awareness, we really need to work towards that. And you accidentally hit someone, either the vehicle or human being. Even having ordinary third party, we shouldn't be dragging this on the highway. We should be with acrimony, addressing ourselves with acrimony. Do you know who I am? Do you know this? There shouldn't be any room for that if we have third party. What third party takes care of that is that the people that you accidentally hit their vehicle, you've committed an offense, it is responsibility of your insurance company to take care of that person's vehicle, to repair it with a limit. But it is your own vehicle that will not be touched because that is what your covers. actually extended to is third party to take care of another person's property that you have damaged. Then we equally have third party fire and theft. It covers loss of damage to participant vehicle, your own vehicle, as a result of fire or external explosion, self-ignition, or burglary, or theft. And is equally involved damage to third-party property, such as injury or death. Insurance company will fully compensate for all this that we have mentioned. And also, we have comprehensive, is the widest form of cover for motor insurance. It provides cover for loss of items in your vehicle, or accidental damage to your vehicle, whether you hit someone or someone hits you. It is the responsibility of insurance company to cater for that. Collision or mechanical breakdown, wear and tear, fire, external explosion, self-ignition, malicious damage. These are the items that are fully covered by comprehensive motor insurance. Hello? Hello?
Yes, we are with you.
Yes, we can
Yeah,
hear
we
with you.
can hear you, sir.
Yes.
We can take the slide to page
We can hear
36,
you.
fire and special peril. Fire and special peril is to cover either our building or place of work. Ignition of fire is covered, or market, where business activities are going on. So it covers fire, lightning, and explosion. Explosion as a result of domestic purpose. The purpose is to provide compensation to the participants. That is the person that insured his property, or the company that insured his property, for the damage to property cover, building, stock, and other content. In the commercial world, it is much more common to find specific peril added to the fire policy so that the cover is built up to meet the participant requirement. Then slide 38, consequential loss, business interruption. Slide 38. We equally need to discuss consequential loss, or we call it business interruption. Yes. And majority of our businessmen, factories, and manufacturers, it is important they put this in place. It caters for business interruption in the course of their business activities, either as a result, as either the loss, they suffer a loss as a result of fire or flood. Any disaster that they suffer that prevents them to continue their business in a normal way. That is why we call it business interruption. Their business is being interrupted. So they are unable to maintain the turnover of the business during this period. So the point of interruption and the point at which they will resume the business activities, insurance company will compensate them for that. Insurance company will compensate them. We've witnessed series of incidents in Akpogbon, Idumota, Oshodi. In fact, I could remember vividly Teju Osho, the fire incident. Many people lost their life due to the shock that all their investments have gone. If we have all these policies like fire and special peril, consequential loss, if we have them in place, there shouldn't be any fear. It will enable us to carry on our day-to-day activities, even if we suffer any loss. Insurance company will step in and compensate us to the tune of our loss. The next one is good in transit takafu. Good in transit takafu, page 39. We call it GIT. It provides coverage for loss or damage to goods while being transported from one place to another. It covers loss or damage occasioned by a conveyance being on fire, derailed, overturned, or in collision with other vehicles, or as a result of accident, breakdown of bridges, and every other damage that could have occurred during movement of one good to the others. Movement of goods from one place to the other. Let's take, for instance, you are trying to convey your goods, let's say in particular, clothing material from Kano to Lagos. From Kano to Lagos, and you don't have GIT. The goods, they are exposed to a huge risk. You are exposed to a whole lot of risks. It will be wise for us to put goods in transit policy in place. If any damage occurs to the goods while you are transporting them from Kano, as a collision with other vehicles or accidents, the goods will be protected because insurance will provide compensation to the tune of the property that you insured. That is the essence of GIT, goods in transit. There are some other items that are not covered, that we did not extend coverage to them because of their volatile in nature, like glass. Those things are very fragile or highly perishable in nature, or chemical explosive. We did not extend cover to them. Then we talk about Takafu as a risk management tool for macro, small, medium enterprises and family. What do we understand by risk management? What is our understanding by risk management? According to CIIN, risk management is defined as a process of identification, analysis, and economic control of those risks that are threatening the earning capacity of an organization. Also, is as a process whereby organization methodically address the risks attaching to the activities with the goal of achieving a sustained benefit within each activity and across the portfolio of all the activities. We're meant to understand that in every activities, in our day-to-day activities, we are exposed to different risks. Where we can decide to travel from here Lagos to Ibadan, it entails risks. Anything can happen on the road. There could be accidents. Even the job we take, you have a new offer. Do you know whether there will be prospects for you in that new organization or not? Is it the risks of going to school, whether you'll be attacked by bad boys in the school? You know not. In every sphere of our endeavors, there are likelihood of one risk or the other that we are exposed to. How do we manage these risks? How do we minimize the risks that we are exposed to? That is where risk management comes into place. Let us quickly look at the benefits of risk management. The benefits of risk management to micro, small, medium enterprises. Our businesses, what are the benefits of risk management to our businesses? The next slide, please. Risk management provides a framework for an organization that enables future activities to take place in a consistent and controlled manner. The next slide, please. Moderator, hello. Can you hear me, please?
We can hear you, sir.
Okay, benefits of risk management. Slide 43. It improves decision-making and planning of business activities. When you have risk management in place, you will be able to take adequate and efficient decisions because there are some volatilities, opportunities, or threats that you might have seen. There are some certain things that are likely to occur if you take this decision. So you weigh and you balance. That is part of the advantage of having risk management in place. It equally contributes to more efficient use of allocation of resources within the organization. Because you look at what you have at hand, then you make a projection that will equate your resources. It also protects and enhances assets and company image. I could remember there is a particular statement that is being ascribed to Nokia CEO. In 90s to 2000, between 2000 to 2010, we can all understand that Nokia is of high value. That is the phone, the model that people use most. Nokia, if you don't have Nokia, then it's as if you are still far behind. But somehow, somewhere, they lost the market. And there's this statement that the Nokia CEO said that they were playing the game the way it should be played, but they don't know how they lost it. That is the essence of having risk management in place. In majority of the banks, in every bank and insurance company, they have ERM now, Enterprise Risk Management. The essence of this is to coordinate the risk management of the organization. it equally develop and support people and the organization knowledge base. That is for the organization. Taking a look at the benefit of risk management to our family, within our family. If we have risk management in place, by taking family takafu, by taking takafu policy. For instance, if you have any of the family takafu in place, like endowment or education, you can use it as a tax rebate. You present your certificate to your employer, then they will give you rebate on your tax. Instead of, because it is a practice globally that premium being paid for insurance, they are not taxable. Meanwhile, out of the salary being paid to you, you are paying insurance company. Then you have to tender that certificate, insurance certificate for life to your people, to your employer. Then they will give you tax rebate. That is one of the benefits. Also, it ensures business continuation. Let's look at people that their businesses suffer losses due to fire, and they don't have insurance in place. That is why you see them clamoring that government should intervene, that government should do something. And what are the number of people we are talking about? There are many. At the end, government can support them, compensate them to the tune of what they have lost, if government will do anything at all. But if you have insurance in place against fire, to cover your business in Teju Osho, to cover your business in Akmogbon, or to cover your office in VI, if anything happens, you will be rest assured that continuation of your business is very, very certain. It also brings peace of mind to the family, to the beneficiary, to the disease, because if someone is having a finance from, let's say, Taj Bank, and before the expiration of this policy, the person passed on. So the responsibility to pay back the outstanding balance of the finance, it will be shifted to Takafu company. These are the benefits of Takafu to the family as well. And also, let us take a look at the role of Institute of Islamic Finance Professional in propagating Takafu products and the industry at large. By this is on slide 45. We are rounding up. The role of Iifp in propagating Takafu products. I hope we are listening. Hello?
Hello, can I help you, sir?
Yes, we are with you.
The role of Iifp in propagating Takafu products. Mashallah. It is very, very important. The Iifp, we organize what we call a professional forum, either quarterly or half-yearly, to discuss the benefit of Takafu products. With it will equally involve all Islamic financial institutions. Mashallah, we are growing rapidly. We are growing rapidly. We have numbers of Takafu that are yet to be approved by NICOM. We have some other financial institutions, Islamic financial institutions that are coming up. Commodity market is equally coming up. So there should be a professional forum. And I believe Iifp can do justice to this. That's number one. Number two, advertising. Sales promotion via radio, television, newspaper, and corporate publications. Iifp might not bear the cost of these, but there will be a synergy between Iifp and Takafu companies. Iifp will coordinate, and the stewardship will be under the Iifp to liaise with radio stations, television stations, newspaper, corporate publications. So there should be write-up about Takafu to publish in different newspapers. There should be discussions on radio, television. And one of my boss is equally doing justice to this on Iifp Media. We equally have a media outlet. Islamic financial institution can liaise with Iifp Media to do justice on this. We have marketing, and also the third one is that Islamic societies like Nasfat, Nawaruddin, Ansaruddin, and the rest of them, we need to market them through the institute, synergize with them, and whenever they have any occasion, we do presentation. Fourthly, adoption of strategic alliance with insurance broker, public sector, and SME. We have notable people in public sectors. Iifp can liaise with them and refer Takafu company to them for discussion that will enable Takafu company to be on some public sector accounts. And equally, insurance company, there should be a strategic alliance with insurance company as well. So, in conclusion, the role of Iifp in propagating Takafu industry in Nigeria, it is very essential that they promote the general development of Takafu by conducting and encouraging and assisting in conducting research. There should be a research work on Takafu. And from time to time, they need to engage Takafu companies to ensure that although Takafu companies have what we call advisory council of experts, whereby these people monitor the activities of Takafu company, Iifp can equally liaise with advisory council of experts to update them about the latest, the research work in the industry. And also producing publication on Takafu and related subjects. Iifp, we take it deemed fit to release publication either on monthly or quarterly or half-yearly basis on Takafu and other aspects of Islamic finance. Like we have Sukuk, we have Islamic banks, NIB, non-interest banking, we have commodities. So these are what we're expecting Iifp, our esteemed institute, to put in place. Thirdly, encouraging and assisting Takafu professionals to regularly update their knowledge in order to respond positively to the changes in the business environment and meet the challenging needs of their clients. We have limited Takafu experts, very, very limited, compared with that of conventional insurance. because the knowledge gap is very, very wide. Very, very wide. Alhamdulillah, I was very, very excited when it was announced a few months back that UNILAG too, UNILAG will be offering Islamic finance. I guess it's on a part-time basis, not really sure, but they will do that. They will soon commence it. And ABU too, either they've started or they will start Islamic finance. Because before now, the likes of our mentors, how did they acquire knowledge about Islamic finance? They had to travel as far as Malaysia or UK. But alhamdulillah, things have been facilitated now. BUK, they are offering Islamic finance in masters. There's masters for Islamic banking and finance. And as well, ABU have started, UNILAG will soon start their own. And there are some other institutions that are about to kickstart their own as well. So there should be need in assisting Takafu professionals to update their
Assalamu alaikum. Yes, the line is off.
Takafu industry and Islamic financial institutions in general in Nigeria. Thank you very much indeed. This comes to the end of my presentation. I really appreciate the audience. May Allah subhanahu wa ta'ala crown our effort with utmost success and let it be of great impact to the listeners and the presenter. So subhanaka Allahumma bihamdika wa ashhadu alla
Assalamu alaikum wa rahmatullahi wa barakatuh. We thank our lecturer for that, and we pray that Allah subhanahu wa ta'ala will reward both of them abundantly. Please, if you have your question, we have like 9 minutes for the question and answer section, and for the 2 lectures, because we have all actually run out of time. And we are sorry for the breaking of the slide and things like that. It was due to network, and I believe that our registrar didn't mean to do that. The other thing we would like to tell our members is that please, for Allah's sake, for our next CPD event, please let us join on time so that we can easily start on time. And for this, if you have any question, just raise your hand, and I'm going to call on you to ask your question, please. Okay, Mr. Tijani Mohammed, please go ahead, please.
Okay, thank you so much. We really appreciate the insight for this wonderful lecturer who lectures us on this issue. Please, my question is straightforward. I have 2 questions. One for the first and second question for the second speaker. Under credit risks, he talks about the credit risks, which we already know that it's all about credit worthiness. But there are something related to it, which they call it 5C: character, condition, collateral, capital, and capacity. Are they related to Islamic Bank and how that works? That's for the first speaker. And the second, I think my question is clear, right? And the second question is about the issue of outstanding balance. As he said, when, for instance, you are relating with the mortgage, when you buy mortgage, for instance, they will only pay outstanding balance. It's not full, which is understandable. But in the case that you do not defaulted, are they going to pay you your investment fee or at once? Thank you so much. I hope my questions are clear.
Yes, they are. And I will call on the first lecturer to answer the first question. That's Mr. Ali Buhari. Please, your question on credit risk. Okay, Mr. Ali Buhari is not. Let me call on Mr. Falabi to answer the second question for you. While we note the question down for Mr. Ali Buhari, although he's still here, but yes, he's not around to answer the question. Mr. Falabi, did you get the second question, sir?
Yes, thank you very much indeed. The answer to it is that in both credit takaful and mortgage takaful, the essence of this is to protect and to ensure that if the policyholder, that is this person that received finance from financial like bank, eventually passed on, who holds the responsibility to pay the outstanding, the remaining balance of the finance? Before now, it used to be they have to take possession, the bank has to take possession of the property that this customer has put in their custody, like building, vehicles, properties, other properties. They will take possession of. Hello? Hello, can you hear me?
Yes, but
Yes, now we can hear you, but it was interrupted.
Okay, the reason why it has to be only outstanding balance is that it is expected of every one of us that we've received finance from financial institution, banks, mortgage house, to pay as at when due. So insurance does not, takafu or insurance, takafu does not cover default. Let's assume you're supposed to be paying at every 25th of the month and you did not pay. That is default. It is intentional. It is default. So insurance, takafu does not cover it. What it covers is if debt occur, there is no, we can't force the debt to come and stand or come and pay the loan. No. So it is the outstanding balance that the takafu company will pay to the financial institution. This policy, both credit life and mortgage, they can equally be extended. There's what we call extension in takafu policies. Okay, you want to extend it to cover critical illness. That if such person is suffering from a very serious illness that will be listed in the policy document, it will be agreed on that this takafu company should equally pay. Because someone that is suffering from such illness will not be able to engage himself in his usual day-to-day occupation to earn income and come and to pay the outstanding finance. Or permanent disability can equally be added, or job loss of job can equally be added. So the benefit under it is just to restrict the financial institution to take over your assets. That is the reason for the outstanding balance and not the defaulted amount. Because while you are alive, you are expected to pay as at a particular agreed date. If you don't pay as at that time, it is called default. So Takafu will not pay. They will only pay the outstanding. I hope I've been able to answer your question very well.
Sorry, please, can I make some corrections? I'm not referring to that if you defaulted. I'm referring to if, for instance, you have successfully paid your mortgage. So the money invested in the Takaful company, are they going to pay you with your investment, that is full payment without anything, or you have forfeited the amount you invested? That's my question. Sorry.
Okay, that if you have successfully reached the expiration, you've completed your payment. There's what we call,
Yes.
oh, okay. There's what we call surplus distribution. It depends on the type of policy that you have. If it is like credit life and mortgage that you've just mentioned, we have a specific account called participant risk fund. This participant risk fund is where claims will be paid from. But while you have completed your payment, what you are paying for, what you've paid for, is to give you peace of mind that if anything eventually happens to you, they won't hold your family responsible, or they won't take possession of your property. Is to give you peace of mind. Not because at the end you want to have your money back. No. It has been agreed from inception that the money you are giving is tabaru, donation into participant risk fund accounts, that you are doing it. Some other people are equally making the payment, that you are coming together to assist one another. That whoever suffer losses, such money will be paid from that account and compensate the person that actually suffered losses. So that is the reason for it. But if the company if it's done by the organization, it is the organization like bank, like Taj Bank, that because the accounts will come from that particular institution, that is where they will channel the surplus distribution towards. But what you are buying is peace of mind. That is what you actually paid for, not in order to have profit or return on investment on it. So I hope I've been able to answer your question properly.
Thank you, sir.
Thank you, sir.
Yes, thank you, sir. Because of time, I will just call only on one person. That's Miss Amzad Zainab. Please, can you, Haji Amzad, please, your question, please.
Alaikum.
My question
goes to the second lecturer. I want to
The line is breaking.
ask that do we have savings scheme, or will you be able to collect your money at the end of 5 or 10 years with return on investment? Then the second question like this: how can we differentiate between the savings with the bank and saving with the insurance company? I hope my question is clear. The first one or the second one? The second one, I asked that, is there any difference between saving with the bank, I mean conventional bank, and saving with the insurance company? Then the first one is that, does insurance company have a savings scheme under the Takafu? That you assume they want to be saving 15,000 quarterly, and the end of 10 or 15 years, are you going to get your money back in full and the return on investment? Maybe they've used the money to invest in 1 or 2 businesses. You get my question? Hello?
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 Salam alaikum. Though line is totally breaking. But what I've been able to got right is that in your savings with account, will you be able to have return on investment on your savings?
Yes. Does
That your question?
insurance company have insurance savings scheme under Takaf Pro?
Yes. Yes,
And
absolutely.
if
We
they have, will you be able
savings
to get
scheme.
return on that money at the end of maybe 10 or 20 years as you planned?
Yes, you will get it. But the difference compared with that of conventional insurance is that, right from inception of the contract with conventional insurance, they will tell you, save, if you are saving 13,000 naira on monthly basis, at the end of a year, you must have saved 120.
Yeah.
And if you save that for, let's say, 5 years, 120 times 5, that is, you must have saved up to 600,000 naira. They will tell you right from inception that at the end of that policy, we will give you 800,000 or 1 million naira. It will be known from inception. In Islamic finance, that is interest. That is not allowed. That is not allowed. We don't do that. We can give a projection that our performance 3 years ago, 2 years ago, and last year, these are the performance for 2-3 years ago. But for us to tell you that at the end of your policy, this is what we are going to give you, it will amount to interest. But what we do, we will give you a projection. But certainly, we are capable because we have a very enviable investment portfolio that can give us a high return on investment, so that by the time we give you your money, you will equally come back and continue to do your business with us. That is what we do. Surely you will have return on investment after maturity of your policy. Thank you.
Okay, well, with this, we thank you for that, Mr. Falabi, for that. And our sister, if you need more on investment in Islamic finance products, I think we have different branches, and we can speak with him. And yes, we have the Islamic. I think we have the Islamic investment management, stock management, and all that, as well as the banks as well. So, and I hope that with this we have done justice to the lecture, and the next thing is just for us to call on Mrs. Mama Adoige to give us announcements, upcoming announcements from the Institute of Islamic Finance Professional. Mrs. Mama, please. Announcements for members. Yes.
Thank you, Monsignor. I'll start by sharing. I'm not going to say, I'll just send a chat so that you can see the Institute's address, so that anytime you want to reach the Institute, you can call on us. We are always close to you. So I'll send a chat message. You can copy and paste on your so that you can always reach us for information that you want to hear, to become a member or for sponsorship and partnership with the Institute. So I'll now go. To the announcement. Can you hear me, please? Can you hear me?
Yes, we can hear you. Please, can that person?
Yes, we can hear you.
That? Please, can you move? Mr. Anonymous, you have to question why. Please help us mute Mr. Bashir. Mr. Bashir, can you mute yourself? Mr. Aliyu, can you help us to mute all these people?
Mr. Hamzat Zainab, please mute. So Alhamdulillah, we are coming to the end of today's webinar and training for members, non-members, and intendee members. We look forward to having you join the Institute when called upon again. So lined up, the Institute has activities for everyone. These activities is to keep members informed, engaged, and to enhance their career paths. For those that have just joined the event or the program of the Institute for the first time, you can join or become a member of the Institute by sending your CV for direct membership application to iifpmembership@gmail.com. This address has been sent to the chat, so you can copy and paste for subsequent use. The Institute also has phone numbers you can reach out to whenever you need their assistance. We have 081 710 13311 or 083 580 3197. It's of importance to note that the Institute usually organizes a bi-monthly CPD. CPD is a continuous development program, one of which is what we have just done today. The total CPD points attainable for members per year is 30 units, 15 of which is verifiable, while 15 non-verifiable. The Institute carries out making it 6 CPDs for the year. The 6 CPDs are divided into 2, 3 of which are free, carrying 2 units each, and paid. The other 3 is paid, which is carrying 6 units. The CPD, like I earlier said, for today is free and is carrying a unit of 2. It is cumulative. So if you join that of today, the previous one that was done, you'll be accounting for you in your record. So please endeavor to join all CPDs when announced. The next CPD will be taking place in August, inshallah. Why August? Because I earlier said it's bi-monthly. This one is coming late. So inshallah, the next one will take place is August. It's going to be paid and 6 units. Please take note when we start sharing invites for it. However, there could be changes. If there are any changes in the timing and date, this will be communicated to all via email, WhatsApp, and the Institute's social media. The Institute on June 19th organized its first executive membership training, which was physical and highly attended. You can join the second batch of our executive membership training, which is coming up on the 15th of October, 2022 at Residency Blue Hotel, Ikeja. This was where we also organized the first training. Like I earlier said, to join or to partake in our programs, you can reach us through 081 710 13311 or 080 358 031 197. I'm calling it out for those that cannot copy and save from their phone. Then the stakeholders meeting is another paramount thing the Institute do to bring stakeholders together. One was held last year and it was really attended by members, and we look forward to the next one that is coming up this year. Prospective participants should note that the next one will come with a dinner and will be held at Sheraton Hotel, Lagos on the 18th of November 2022, while our conference will be held at the Radisson Blue Hotel in Ikeja on the 19th of November. So when you're called upon, try to attend. The stakeholders conference is going to be very, very eventful because to bring about stakeholders, and it will enable us come together and meet and discuss on how to make Islamic finance move forward now and in future. Like the lecturer mentioned how the Iifp promotes Islamic finance. These are one of the ways, one of the ways we can do it. Because by the time we come together and meet, rub minds, we should be able to reach a reasonable grant, inshallah. So I'm also using this medium to inform our incoming members that the 2022 membership induction will be held on the 15th of December 2022. Further information on this will be communicated to those concerned via email. Lastly, most of our important Lastly, and most importantly, we hereby inform all inducted fellows of the issue that the Governing Council hereby invites them to a meeting strictly for fellow members coming up on the 7th of August 2022. I'm using this opportunity to inform you of the meeting. Please keep the date. Details and the office invitation will be communicated to those concerned by the Secretariat via their email. The lecturer, while giving his lecture, Mr. Iifp Apolobe, also mentioned the University of Lagos Master's Program, which is currently ongoing. I'm happy to let you know that the Executive Master's Program and Postgraduate Diploma of Non-Interest Finance of the Lagos Business School was done in collaboration with the Institute of Islamic Finance and Professionals. This was done to meet the needs of the members and the public. The training commenced on the 10th of January 2022. Subsequent ones will also be publicized in the Institute's social media. Please, when these opportunities are put forward to members and non-members, let's endeavor to key in so that the efforts of the Institute will come to play. We will all benefit from whatever the Institute is doing. Normally, we publicize this events for others and people to know. Then should you be interested in sponsoring or partnering with the Institute, like I earlier said, you can reach the Institute via email or call the Institute's number 081-710-13311 or 080-358-03197. Another handle to call to is 080-344-59801. So looking forward to hearing from you or any queries you have from the Institute. Thank you.
Thank you very much. Thank you very much for that insightful information. Please, let's try as much as possible to do the needful when the time comes, especially for the fellow members. Please, the invite will be sent before Sunday, and is strictly for fellow members of the Institute. And for the executive training, please let us try as much as possible to key in. The first one was, as she made mention of it, was aired at Radisson Blue. The second one will be at the same venue. Then our stakeholders events coming up at the end of the year is still there, and we still have like 2 more CPD before the close of the year by God's grace. So let's try as much as possible to attend all these. We are all growing the Islamic finance together in Nigeria, and we need to try as much as possible to do the best that we can, so that we grow the Institute together. We will all benefit from it together. And as we all said, as she made mention of it, we need sponsors. We are ready for partnership, and we are open to queries and question and answer. She has given the phone numbers, and we have. If you are a member of the Institute and you have not been added to the WhatsApp group, please contact that number so that they can add you as soon as possible. And if you are willing to be a member, there is a direct membership that is open. She has already posted that, so that you can quickly and join us through that route. So on this note, we are going to call on we have gone past our time. We are going to call on one of our members to please give us the closing remark and so that we close for the day. To do this for us, I will call on I'm going to call on Mr. Adeshola Khalid to do the closing remark for us. Thank you. Mr. Khalid Adeshola. Walaikum salam.
Yeah, this is Bakari Khalid Arishola. We want to thank Almighty Allah for giving us the opportunity to hold this program today. And we give thanks to Almighty Allah for all the efforts given by the presenters. So Bismillah ar-Rahman ar-Rahim, Alhamdulillah Rabbil Alameen. الرحمن الرحيم مالك يوم الدين إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين سبحان ربك رب العزة عما يصفون والسلام على المرسلين والحمد لله رب العالمين.
Well, thank you very much, Mr. Bakari. And we said we should do the closing remarks. So I'll call on the registrar to end the section for us. Thank you. Mr. Mansour Musa.
Okay, just to thank everyone for your attendance at this event. We really appreciate your presence, and I hope that we have all benefited one way or the other. Our most appreciation goes to the facilitators for their time and therefore for the contribution they have made in this program today. We thank you very immensely, and we pray that Allah subhanahu wa ta'ala will reward you abundantly. And also to those members who joined from very far, from the north, those are outside the country, those are within the country. We appreciate your presence, and we pray Allah subhanahu wa ta'ala to reward every one of us. On the last note, I just want to say that we should always be responsive to the call of the Institute. The Institute is still developing, and we are the one that can actually, establish the Islamic financial doctrine in the country at large. We are the first, and we are hoping to be the number one for a very long time. We're going to be coming up with exciting information. We are making a lot of progress in terms of becoming, attaining the chartered status for the Institute, and we'll be telling us the progress we are making in that regard. So thank you very much, and I wish you the very best in your various endeavors. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. With this, we have come to the end of the event, and we can all recite the national anthem. There's nobody to play that for us, so, and that's the close of the event. Thank you very much, and thank you for joining. God bless you all. Thank you.